Good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome everybody to the art and science of active trend trading. And this is the update for the week of 1 October 2018. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. This recording is being done on Tuesday. Monday has already gone by. Tuesday, the market's already gone by. And so we're getting up to update and ready for Wednesday of this week. It's been a very interesting week. We've had such a mixed market over the last couple of days. It's just basically been crazy. We had good news on Monday evening, of course. The good news being that the NAFTA has now been replaced, and both Mexico and Canada is in a trade agreement with the United States. And other good news is that China may be coming to the table on some of their trade issues. And so it's been all positive news for the economy moving forward. Even the Fed's happy. It just seems like it's just absolutely fantastic. One of the things that's really cool that I like, hey, I'll fess up to it right off the get-go, whether you like it or not. That's, it's too old. I'm too old to change, but I'm a small government kind of guy, and I like to see it when the government kind of does its deregulations and lets businesses just do what they do well. Now, I'm not saying that they should do them in an unsafe manner or a non-environmental manner, but it's nice that they can basically be functional, operational. Because remember, just a couple of years ago, we were hearing that, 2% GDP growth was the new normal, and that nothing can happen unless we had a magic wand. Well, apparently somebody came along with a magic wand, because the economy's been just moving ahead dramatically, growing at 4 to a little bit over 4% for the last few quarters. And so for that, I'm really pleased, because basically what happens when the economy grows like that is the revenue starts continuing to grow and comes into the government, all that kind of stuff. And the only problem is our politicians up in Washington, when the new revenue comes in, rather than applying it to the deficit, what do they like to do? They like to find new places to spend it. But that's another problem for another day. Anyway, the Art and Science of Active Trend Trading Update. It's a weekly update of video, update video to accompany the newsletter. We'll be posting that as soon as we get this recorded and edited. And we're looking at potential bonus trades or sign-ups for the week, and then other market-driving events. We talked about that. We're starting to roll in a couple of weeks. We're going to be going into a new session for earnings, and so that'll get us right back into the ballpark of earnings trades and potential setups moving forward. I'll also be talking about a tech mechanical tip for the day. What I'm going to be talking about today is I'm going to be talking about follow the few. Follow the few. One of the things that I see in the majority of traders, what tends to happen is their watch lists are just too stinking big. And it's okay to have a big watch list, but dadgummit, you better have a way to sort that watch list out so you can get down to the good stuff. Or actually, when I say good stuff, what I'm talking about is get down to the stocks that are setting up in a very efficient manner. So let's take a look at, let's see, no earnings related report right now. Earnings setups, nothing going on with that. Bonus setups. Again, the news, the market has been very interesting. We have a mixed market right now with the NAFTA deals, the new NAFTA agreement. Unfortunately, the small caps have been whacked. I mean, they got whacked. And then this morning also, what took off? Well, gold took off. Now, it just ran back up to past resistance and then sold off from there. But is it basing to provide another upswing? Do we have a longer setup in, we have a bigger setup coming along in IWM than the Russell with its larger pullback that'll be seasonal and just basically set us up for a great run between, you know, October, November, December into the end of the year, which tends to happen from a seasonal perspective. So let's take a look at here. Okay, the follow the few. What do I mean by that? One, if we're just following a few stocks, you know, it basically helps us to be more efficient and effective using our review time. Now, if you work for a living and you're spending, you know, 10, 12 hours a day at work, but you still want to be trading a little bit, having an effective and efficient review status and so you can get down to just a few stocks is very important. Now, one thing for active trend trading premium members, what we do is we basically have isolated things down to 7, what I call a magnificent 7 leveraged ETF. It includes 3 index ETFs, and then it provides 4 and sometimes 5 of the sector ETFs. And what we do is we like to trade the leverage portion of those. We can trade, and it gives us so much flexibility. We don't have to be constantly going out there search for something to trade, because each one of these tend to have multiple runs every year of somewhere between 10 to 15 to sometimes even in some of them the more volatile ones up to 25% for the year. So use your time efficiently. When I say, and so one of the things I like to do and what I try to do for our members is I put out every week. Let me go to that really quick so you can see it. There we go. I put out 3 watch lists. And they show up here under the free. And now, if you have to register, but there's no obligation to register. But my free watch list shown up here under the Art and Science of Active Trend Trading. Here's the one we did for September 23rd. You go there. And I do basically 3 different watch lists. Now, this is to make it easier on you. Well, here they are down here, and I sort them and I put them down in this area here. I have the running list, and what that is, the running list is every stock that has shown up on the IBD 50 for the year. I have what I call the sorted list, not like, and I don't mean sorted in a bad way. Anyway, look it up. So the sorted list, what this is basically is it's sorted by fundamentals. And the fundamentally strongest stocks turn up on top. This is for the IBD 50 every week. And then lastly, this is something I've started adding in, is I do a composite list. And what I do is I capture every stock that shows up on 13 premium IBD watch list for the week. And I find out which stocks are showing up on multiple lists. The more lists they show up on, the better. The more lists they show up on, the better. And so anyway, there I am. I just want to say hi, everybody. Aloha. And what that basically tells us is that it's showing up on a lot of lists. It's basically is either in the news a lot. Institutions are following and buying it significantly. So we want to pay attention to those, and especially if we combine those together with some of the other watch lists. Okay, here's the sorted list. And take a look. There was the list. This is this week's sorted list. Look at the stocks that turn up. These are the fundamentally strongest stocks for the last week. So Legend, Venom, Grub, MTCH, we've heard those before, but it gives you a single place to say, oh, that's what I want to watch. So instead of trying to look at 50 stocks, now you can go in here and isolate in on just 7. Works really well. What else? What other stock? What other do we have? I'm gonna turn my picture off there. There we go. What else do we have going on here? We have also, there's a composite list, which I showed you. Here's the running list, basically. Okay, here's the running list. So first, this is the IBD 50. Then I convert this over into and do. There's a little macro in here that works, thanks to Lyle. And Wright, who set that up for me. And basically it then pulls, and I have 174 stocks on the IBD running list that I basically sort, and I put that out as a watch list so you can pull that into your own trading platform, your own watch list to be able to watch going forward. Now, so what I now do is I take and I say, okay, which of those entities is closest to a buy point? And it's also a very simple way to figure that out. Let me go over here. There we go. Boom. So this is, and I've shared this also with numerous people, this is my watch list here. I'll push that over there. This watch list turns out to be, this is the composite list for last week. The composite list, of course, is this, and it typically is about 100 stocks. And I like to sort it based on TSI because TSI is one of my primary triggers. I have an intraday TSI, I have a daily TSI, and I have a weekly TSI. And so I'll start with the daily TSI. And I'll just sort through that, and I'll go, okay, let's see what we got going on here. There we go. And where am I interested in it? Well, I'm interested when it's down towards the bottom of the category. And they give me a few here. Okay. And when I see one that has both my daily and my intraday, or my daily and my, let's see if I can find one here, weekly with a negative number, that tells me that those are the closest to reversals. So I'll sort it that way. So PAN, Palo Alto Networks, comes out as one of the stocks. And I can, if I just want to hone in here and say, okay, if I'm, I can go to PetQ, I can go to SIVB, I can go to Momo, I can go to any of those. And in a very rapid pace, I can run through the top 10. Which one has the best option for, is closest to the buy point. Or I can go over here to the intraday. And I say, okay, intraday. In this case, Paycom, intraday was very pulled back. And we're going to take a look at Paycom, and we'll take a look at Palo Alto Networks. But it sorts it right to the top, where I can just say, okay, I just have to look at those first few. Is anything in those looking like they are tradable? If I want something longer term, what do I go to? I go to the weekly. Now, as you can see, weekly, the composite chart has shown up very, very strong. Okay, it only had 3 that were below the 0 line, and BZUN is one of them. And we'll take a look at that. And here's what I was talking about: BZUN. The weekly, the daily, and the intraday is below the 0 line. So BZUN. So in a matter of just a few seconds, we have now gone through. We have 4 stocks to look at, 3 stocks to look at. I pop over, I throw in some of the other ones. What are my strongest fundamentals? Is that a good place to search? Sure. Okay, and I go through the same rigor, the same thing. I sort on the daily, and which, here we go, daily. Okay, look at Trex. Trex is a strong fundamental stock, but it's been, it shows me my daily. So I can take Trex, Palo Alto Network. Yeah, I want to pay attention to Palo Alto Network. Momo is another one of those because it showed up on my other chart. So Momo, and I'll take a look at Trex just for shins and grins. And now let's go to the intraday. What I got? Paycom. That was already on my list. Cyber. Yeah, I like Cyber. Cyber's been on some of the lists before. And then we can go over to the weekly. What's the weekly telling us? Again, weekly's been fairly strong. And when I say strong, what I mean, like, very few weekly charts are showing in the negative or below 0. Nano, or Mork and Mindy's stock, is showing down about 11. AEO. I'm going to take a look at AEO just for the heck of it. And then I just pop over to the charts. Wham, bam, let's go here. Now I can go a couple of different ways. One, I can go either, I'll go the weekly, the daily, or I can go, if I'm trying to get a quicker trigger, I will go daily and the hourly chart, because that basically was based on an hourly chart. Let me put this to an hourly chart. There we go. Pow. Okay. TSI, here's what I'm looking at, friends. TSI, TSI. So what were the stocks we came up? And just real quick, we're going to run through them. Palo Alto Networks. Do I have a signal? No. Well, yeah, kind of. It's pulling back. Yeah. Palo Alto Networks, well worth watching. Where's it pulled back to? Well, to the 50 here. So I can put a little star by Palo Alto Networks saying that, this is one I want to pay particular attention to because it's pulling back very nicely. TSI is almost back down to the negative 42 area where that's kind of its ultimate bounce area. Hourly here. And then I can also just pop over, I can pop back over to the, here's the monthly. And you can see monthly, yeah, it looks like it might want to fall a little bit more, but it's pulling back into, where's it pulled back to before? Around the, this is the 20-week moving average, which equates approximately to the 100-day. That's where it's found support before. So Palo Alto Network, I'm just getting a nice little flag. Is it ready to buy yet? No. Is it closer to being able to buy than some of the other things? You betcha. So that's one. I can keep my eye on that. Paycom. Again, I'm back to the daily and the weekly now. And I did not want that. PAYC. See what's going to come up here. Yeah, it's not what I want. Okay. Okay. Followed, but still above the 50. That's all good. We're falling down to, we have found, we're at a level of support where it broke out before, 146. Looks like it's trying to base on an intraday chart. So again, do I like this pattern? It's okay. It is a, basically I can say this is a flag or a channel, downward trace channel. And then, I can actually just throw that on there. Here's my channel line. I'll just whoop that on there really quick. Gives me something to reference a little bit later on. There's that. Pull that down to there. So I'm operating within that channel. And so I'm close to where you'd expect it to reverse and turn around if it's going to stay inside the channel. Like the 50 line, intraday is very oversold. So Paycom, interesting looking, BZUN. Okay, BZUN, similar type thing. Look over here on a daily chart. Been in a downtrend. It is basically, looks like it's trying to find some support here. Let's take a look at the hourly, the daily. I don't want that. Okay. And this is where it's always important to take a look at both the daily and the weekly, because in a daily chart, you look at this, and for the last almost 6 months, it's been basically in this downtrend. It looks like it's finding support down here about the 44 level. However, in reality, it is still in a nice uptrend on BZUN, and the longer-term TSI has not turned up yet. But when in the past, when the longer-term weekly TSI has reversed and turned back up, it's led to some pretty nice gains in BZUN. The last one had happened way back here. It went on and ran. Let's just, how far did it run? Well, there's 92. There's before it broke back, actually. So you wouldn't hear where it broke back below the 20-period moving average, 20-week moving average. You got about 154% gain. So again, good one to look at. What about Momo? Again, looking pretty good. Nice formation here, kind of almost a inverted head and shoulders kind of formation. But again, moving sideways. So is it of interest? Sure, it is. Now, is it in a buying position? Not necessarily. But anyway, you should get the idea. What was the other one we like? Trex. Well, we don't like it. We'd have to look at it before we know if we like it or not. It is selling off fairly significantly. Okay, now it is sold off below the 50 on increasing volume. So what this may be telling us is that, guess what? I'm ready to go into more of a rest. So since it has pierced below the 50 on increasing volume, we may look at this as any pullback back up into these moving averages here would be a short on Trex. Cyber. Again, big sell-off on Cyber. Above average volume. This was kind of a breakout, failed breakout. Weekly chart looking suspect, because if this is almost a reversal, equal opposite type reversal, and that if that happens in a bearish way, could be very bearish for our good old buddy Cyber. So we'll keep an eye on that. It is still holding the 50. It has strong support down here at about the 72, 72.50 level. And last but not least, I wanted to take a look at AEO. AEO. Again, look at this. Now this is a perfect example on AEO. It fails and falls back down below the 50, gets support at the 100, bounces back up. This is a relief rally, back up into resistance, sell off. Another relief rally, back up into resistance. That 34, 58, 20-day moving average, and now the 100-day moving average is strong resistance. We get our sell off on AEO. AEO may be looking to, hey, we can go deeper. One thing that it hasn't done, though, has not broken the 200-day moving average. However, what gives me negative vibrations on AEO is TSI weekly still pointing down and pointing down hard. Got up to the 0 line, stopped, dead in the water, and dropped. So AEO looks like it may be getting ready to move into a downtrend. And if we get that on the weekly chart, anticipate it heading further to the floor. How far might it go? Down here, here's past support down here about 20. So about $2-3, which on a $20 stock or $22 stock would be what, 15%, something like that. Yep, 13%. So, and it could actually fall even further than that. But yeah, this is looking really toppy here. So, hey, just real quick, that's how I look at these. And so I hope that has given you some insight about what we're looking at going forward. And of course, here is from last week's section. And then just really quick, we're looking for seasonality in oil. Is seasonality going to kick in and oil go into sell-off mode going into the end of the year? Or will the hot economy keep oil prices rising? Russell, looking for Russell. October is the window to look for Russell to do a rebound. Be waiting for that. So if you have any question, please contact me at dww@activetrendtrading.com. As always, trade wisely, trade properly, and of course, stay on target. Aloha, everybody. God bless.